G'day traders, we're going to wrap up with the markets for Wednesday the 23rd of October. As you can see from the 1 minute chart which we're showing here, a very range bound day. At times there was high volume, so it wasn't that there was lack of volume, it's just it's really stuck between two levels. So let me bring over the 15-minute charts and show you a little bit about this before we have a look at it, a little bit of a closer look at the day. So here's the Wednesday, the day we're looking at here. We've come to the end of the day now, but as we're starting today, and this is what we always do in the trading room, we sort of take a look at the longer term perspective, where there's major levels in the markets. And one of the real keys to trading is having or knowing of key areas within the markets, and that's what these lines are marking major support resistance areas. So these lines are already marked in as we open now up to today's market. You can see this upper area here really started to fall back through here with a couple of these high points, and then we bounced off it here. It's a significant low point in yesterday's market. And then we've got the bottom side of this range, basically the other side of this channel. We're touching and finding support all through here. But then before that, it was used as resistance. So certainly two very key areas that have influenced the market from an upper and lower perspective. So as we opened up today, we could see the market was starting to get back above this upper side of the range, but then came back within it, and it was just dealing around it through the pre-market, through the couple of hours before we opened up the cash market. We really just said, this is a key level we want to see. Can the market get above it and get a continuation through it, or does it want to get underneath it? And from there, we'll potentially look to go to the next level. And what's actually happened is it's come straight down to the next level and just ping-ponged between the two levels and really consolidated between the two. So let's have a bit of a closer look at that. So here's the opening of the market. We're watching it. We're really keeping an eye on this level, talking about this level, and we can see we've bounced straight off it. Tried to push higher, but nothing. They couldn't really make anything off it. There was no power. They couldn't get past this previous little swing high. We're watching other markets. They're all stalling to the upside. From there, they shifted straight back down underneath the level, and then from there straight down to the next support resistance level that we talked about. And then you can see there's just this toing and froing going on between the levels. Another thing that we're looking at, around this particular time, and if you sort of watch where my cursor is and then see that similar point on the other two markets, we're looking at the Russell and the Nasdaq on the other side there, and we use these markets as an indication of where the market's going. Okay, if you've got strong sort of confluence and other markets heading in a direction that can really confirm momentum and direction, and as far as possibly a future breakout or trend forming. The other thing it can do is sort of give you warning bells to sort of just be wary and stay away. In this particular case, an example of that, what's happening here is you can see the other two markets. They're certainly not on the same page. They're doing quite different things. You can see the top left-hand corner, the Russell, pushing higher, really trying to get up higher, and anytime there's an opportunity to buy and go higher, it's really taking advantage of that. Whereas Nasdaq, doing the opposite, really trying to push lower, resisting any sort of buyers. As the buyers come in, it resists, and then all of a sudden it gets an opportunity to sell. It did that quite quickly, and you can see Nasdaq, kept on trying to push lower, where the Russell, you're getting these spikes upwards, really trying to push higher. What that means is it's just there's a lack of momentum and lack of direction, common between, say, the buyers or the sellers across the markets. And when we see this happening with other markets doing quite different things, that is a bit of a warning sign to say, okay, let's just wait and till these markets do sort of come together, and then we can get a little bit more consistency or belief in the potential trend and momentums that are coming. But what eventuated was really a constant sideways day. And when you're seeing something like this, and you can see it bouncing between levels, again, it's just one of those cases where it's really best to sort of sit and wait. Uh, what we were looking for and what it showed signs of, and let me scroll along. Eventually, the Nasdaq kept on going sideways, but the Russell was really trying to break higher, and it was around about this area here we were talking about, looking for the market to really get up and start getting above this level, come back and get some sort of support off it and look to buy. But it never really eventuated till late in the afternoon when the trading room was finished by then anyway. But we had ideas and perceptions of where we believe the market's going to go, but that just never eventuated. It just stayed within the range. So what that means is it's very important to always let the wait and tell the market what you want it to do, rather than just sort of reacting to what the market does. Trading from a positive frame of mind, going, okay, we can see we're trading in a sideways range here. We're not going to risk it and sort of get in there and be guessing. But if you're prepared to get outside these levels, or do something in line with our belief, then we'll look at trading opportunities. And this particular day, nothing did eventuate. So that's a wrap up for Wednesday, and we'll be back on Thursday.